All right, that's the president alongside the Japanese prime minister in the Oval Office, as you can clearly see, giving an update on the war, which he continues to call, as you heard numerous times, an excursion, a little excursion. Said he knew oil was going to go up, said he thought it would be worse. He obviously continued his criticism of NATO. As for the war, I think it's going to be over pretty soon, said the president, that we are substantially, as he said, ahead of schedule. And then a familiar refrain in terms of the criticism of not only the Fed chair himself, but the building renovations, which are still the subject of that federal investigation. We'll bring in Eamon Javers now, who joins us live from our Washington newsroom. So what do you make of what the president had to say, Eamon?
Well, Scott, I was actually focused really on what Prime Minister Takaichi had to say here, because the question is, what is the Japanese and international commitment going to be to this coalition that might put together a naval force in the Persian Gulf? She had a couple of stark things to say at the top. She said that the global economy is about to experience a hit because of a huge hit, she said, because of this development, that is the Iran war. And she says that she's brought specific proposals to calm global energy markets. She didn't detail what those proposals were. So I think on the back end of this meeting, what we're going to be looking for is, one, what are those specific proposals to calm global energy markets that the Japanese want to implement here? And then, two, what is the Japanese military commitment going to be? I mean, the Japanese have been very reluctant ever since World War II to send their military around the world in any kind of offensive capability because of the signal that that would set and the memory of Imperial Japan. This, though, because of the enormous reliance on oil from the Strait for the Japanese, might be a situation where they feel they have to get involved. So watching the body language, the signaling here, a very warm hug from Prime Minister Takaichi to President Trump at the beginning of this meeting out on the South Lawn. And then we'll see where we go from here throughout the afternoon.
They're still trying to sell this, it sounds, Eamon, as a short-term thing by calling it numerous times a little excursion. Certainly implies that, saying directly this is going to be over pretty soon, I think, substantially ahead of schedule, and the idea that they are not going to put troops anywhere, even as you have the issue of the Strait of Hormuz still in question.
Yeah, the president said he's not going to put troops on the ground, but he wouldn't telegraph it if he was going to. I think the key thing to focus on is the money. There are these reports that the Pentagon is asking for $200 billion in Iran war funding. The president was asked about that here, didn't dispute that number. He just said it's a small price to pay to make sure that we stay tippy-top, that is, in terms of military supplies and capability. So the president here, seeming to endorse a large number for Iran war spending, that signals, I think, a more extended commitment than maybe some of his rhetoric might suggest.
Okay, appreciate that from you, Eamon. Eamon Javers down in Washington for us. We'll check the markets here. Welcome to the Halftime Report. Of course, I'm Scott Wapner. We do have the investment committee with us today as well. Josh Brown, Shannon Sakosha, Malcolm Etheridge are all here at Post 9. Let's check the market for you, though, see where we are trading. We've been in this range for a bit now. Dow down almost 400 points. It's less than 1%. NASDAQ and the S&P are both lower as well. As crude oil makes a move here, you almost, Josh, have a two-pronged problem for the market. Not only the move in oil, WTI probably doesn't best represent the jitters in the market just because, Brent today topped 119. And then you have the Fed chair who was more hawkish than not and said inflation's not coming down as much as they, quote, hoped. The odds of a Fed rate hike by June are now higher than the chances for a rate cut. That's the backdrop. That's what you need to know. A hawkish Fed and oil that continues to go up, and stocks as a result are uneasy.
I don't often question the wisdom of the market, but I think in this case, that's crazy. The Fed knows damn well there's nothing it could do with interest rates that would change the price of gasoline at the pump. It's almost an absurd proposition. So I don't believe that to be the case. I understand why the market believes that, just looking at what oil is doing to the inflation numbers, what high gasoline prices are doing. But the knock-on effect to the consumer is actually disinflationary, more so than it is inflationary. It is absolutely causing people to think twice about spending, and I think we're seeing that sentiment everywhere we look. So I don't believe it. The bigger issue for me is the state of the financials. They look absolutely horrible. The 2-year is up the most on the curve right now.
Sure. 385 was what it hit earlier today. We can look at it as Josh is talking. I didn't mean to interrupt, but just to give context to that, yields are definitely up, especially on the short end. on the back of what Powell had to say yesterday and where the Fed seems to be positioning.
Yeah, no, Judge, it's the right interruption because that's really the most important thing. This is the highest we've seen the 2-year since August of 2025. And in the meanwhile, it almost feels like there's nowhere to hide the last couple of days. Gold just broke down below its 50-day moving average. Metals and mining on the whole the stocks themselves are negative. The materials are down 2%. We've lost the home builders because mortgage rates are not coming down at the rate that we had hoped earlier this year. And now you've got 26% of the S&P 500 below the 50-day, which is the lowest reading since Liberation Day almost a year ago. That is a 2 standard deviation below the mean, and it's problematic. 52-week lows on the NYSE are now at 5%. That's the highest since November. So it's a risk-off tape, and we've lost a lot of the areas that we were using as sort of like all right, here's a little bit of a hedge, or here's a little bit of a non-correlated asset. People are just right now looking at a lot of these developments, looking at the bond market, looking at oil, and just saying, you know what? I don't need to figure out the next thing I want to invest in right away. Let me move some cash to the sidelines.
Dubravko Lakos over at JP Morgan's cut his S&P target to 7,200 from 75, just to, represent where sort of the risk factors are now and where sentiment seems to be, and that the market in his mind is continuing to price in a short term, a quick end to what's happening in the Middle East. And he's not so sure, and nor are, other investors too. How do you see it?
I think those two things run together. I think you made a really good point about the 50-day moving average when you harken back to Liberation Day, but the 200-day moving average, which we've now fallen below, we haven't seen us breach that level since May of 2025, which was sort of the backswing from Liberation Day. And so I think that's meaningful here too, because it shows just how much pessimism has just kind of come into the markets all of a sudden. I think it's also a little bit disappointing to the point that Shan's making about where we are, because earnings were actually really strong in the first quarter. We blew out expectations by a wide margin for the majority of stocks that reported. And I think that's disappointing moving into a market that now is being uprooted by oil shock concerns. We're being uprooted by now private credit concerns that already existed. Now there's even real conversation happening, whether Josh likes it or not, about interest rate moves upward instead of downward. Like, that's all meaningful for a market that was coming into the year celebrating how strong things look from a fundamental perspective.
Hey, I mean, the kind of market we're in right now, look at Micron. You need you a better example than Micron today, which had a blowout quarter. There's no other way to say it. Now, the chart's been a blowout for the last several months, so maybe that has more to do with this than anything else. But they had a blowout quarter, and the stock is down. So in this kind of tape,
similar to Nvidia exactly. A couple weeks back,
and this is in a huge high flyer, and the stock's down 5% on what I said was a blowout quarter by any estimation.
Yeah. So I alluded to the financials for a reason. I think that structurally they were extremely important to the bull market that we experienced in 2025. And I think from a sentiment standpoint, we can't afford to lose them to the extent that we are. They're not as big as tech. They're not as big as consumer discretionary. But when investors think about the lack of follow through from the financials, it just makes them second guess all of the other rallies that we had been seeing. And now that lagging performance has actually turned into detracting performance. These stocks are very important. Capital One Financial is down 26% year to date. That very rarely happens outside a much bigger disturbance in the financial system. Wells Fargo's in a 20% bear market, Prudential not far behind. The breadth of poor performance in the financials is 100% creating a psychology problem amongst the bulls. Out of 70 financial stocks that are in the S&P 500, literally only 5 of them are up this year. Only 5. And they're not necessarily the 5 that you want to see. CME and CBOE, which are two companies that thrive on market volatility. Interactive Brokers up 5%. Then you've got CB and Travelers, and that's it. All of the other financials are in the red, and many of them substantially so. How do we get a bull market going with these companies so deep in the hole?
We've discussed this so many times that until you get the big banks to stabilize in some respects, the market is going to be on shaky footing. Over the last month, all of the big banks, Citi, JPM, Citi and JPM down 6% and 7% respectively. I go down the list, and the losses are even greater than that. B of A, Goldman, and Wells, 12, 13, and 14% respectively there. Jonathan Krinsky, again, Malcolm, opining on this, says there's little evidence that the downtrend is over. So what do I do with that?
I don't disagree with that, but I do think we're in an environment now where net interest margin matters less for the big three, Goldman, JP Morgan, and Morgan Stanley. I think that we're in an environment that is ripe for IPO activity. We've got 3 blockbuster IPOs set to happen at some point this year, presumably, between SpaceX, Anthropic, and OpenAI. I think all of those will be additive to the overall system, and I think regardless of how interest rates move throughout this year, those 3 are going to participate in just about every single big M&A transaction that we see this year. So there's still opportunity for them to finish the year strong, even if the entire sector doesn't actually go in that direction.
So you bought Goldman.
I did.
Is that a new buy?
Yeah, it's a brand
altogether?
new buy for me. I'd been wanting to complete that trifecta I just mentioned for some time.
Okay.
But Goldman was the strongest one among the 3, and the price really wouldn't come down from the 9s.
Well, it did.
And so finally, around $7.85, I got an opportunity and decided to start buying.
I like the move. Because I don't think things are falling apart, and if they don't, capital markets and investment banking, M&A, all the things that Goldman does literally better than anyone else should continue to shine. I'll show you the anti-Goldman. Give me a chart of Robinhood right now. This stock is literally sitting on a breakdown level. You got to give me longer than that, guys. This is in a 50% drawdown. You want to talk about an indicator of investor sentiment. And I know there's a lot of crypto in here. Look at this level of support that Robinhood has been sitting on top of basically since the beginning of February. You don't want to see what happens if this breaks down. You could be looking at a $50 stock relatively quickly. That's concerning because I think that stock, more than most others, speaks to the risk appetite of the regular investor. The other name that...
Hold on real quick. Let me just...
Okay.
I don't want you to get off that yet, because this plays perfectly off of what you're just talking about. According to JP Morgan, retail money invested is down about 15% week over week, and in total, 43%. Retail money invested down 43% more or less since the start of the conflict.
It turns out people really love instant gratification when they put money to work, and when they don't get it, the trend weakens or goes in reverse. I think that's what we're seeing here. We've had a very long run of people getting that instant gratification. I put $10,000 into the market. It's worth $11,000 a week later. Look what a genius I am. When that goes into reverse and 10 becomes 8, obviously, you start to see that enthusiasm slow a little bit.
I don't want to get off the banks.
I think that it also makes sense that we have to consider how many refinancings are going to come into the market very soon if we do see a move in rates to the positive
better
side.
get a big move down in rates and real quick.
Well, I don't mean residential real estate. I mean more from the commercial perspective. I think the banks are taking back some of these loans we've been asking questions about from the private credit market over the last year. I think that's probably going to pick up because a lot of investors are moving away from that space, and so the capital available for it is going away too. So we're going to see more traditional lending pick up too, I think, in the larger business segment if we do see interest rates become more favorable.
All right, let's squeeze in a break. We've had some breaking news, obviously, off the top. We're 30 minutes in. Dow's down a little more than 300 still, and we have a gutsy call today. For our call today, it's from Morgan Stanley, and it is in one name that has been beaten down since this war started. We'll discuss that and more. Josh Brown's best stocks in the market, too, just ahead. All right, welcome back. I thought we would highlight what I think can be described as a call of the day, even with no direct ownership on the desk. It's nonetheless feels like a gutsy call today from Morgan Stanley on Carnival Corp, the cruise line. They upgraded it today to overweight. It was equal weight. You know what's happened? Let's back that up a little longer. Let's go a little bit. You can see what's happened, I think, to cruise lines like the airlines and other travel-related names since the war started. A little further back than that, please. They say historically the best time to invest in travel stocks has been following demand shocks. So we're working on the chart. But yeah, okay, demand shock, stock goes down, down 20% year to date. Obviously, the slide's been a little more dramatic since the war started. So buy it. What do you think?
Well, there's two sides to this argument. Number one, we have seen periods where we anticipated, for instance, the sharp rise in interest rates to essentially disarm the consumer entirely, and we didn't see that, and we really didn't see a change in experience spending coming out of those interest rate hikes. The other side of this is that there is going to be an impact on non-discretionary spending from at least even a short-term period of higher energy prices. But Scott, we haven't seen demand deterioration in travel despite compounded higher prices over the last couple of years.
Yeah, but I mean, you start to game it out, right? You're down 23% month to date on Carnival because obviously if fuel prices are going up, not to mention the psychological impact of traveling when you're having a conflict like we are, but then the added input cost of rising fuel prices doesn't help these stocks.
But there's a lot more if we're talking just about cruise lines, there's a lot of transparency about forward bookings here too. So I think that there is probably more so than what the airlines can estimate, 3, 4, 6 months ahead of time. Cruise lines are benefit from that future booking scenario. I do think that the call is gutsy, but if you look at consumer discretionary and you look at the pressure that it's been under, there is going to start to be some more interest in buying up some of these stocks that have proven to be where higher middle income and high income spenders have continued to traffic.
We'll see. You have to see to what level oil prices get up to. If they stay, the commentary seems to suggest right here, okay, we can deal with that for a little bit. You start to get up to like 130 and even higher than that, then you're going to start to have some demand destruction on the price of oil just going higher and higher. But I want to move on to Jeffrey's call today. They downgrade Kinsale Capital to a sell. It's underperformed. The target to 312 from 392. So back that up a little bit longer, guys, too, if we can see the stock more meaningfully. Yeah, thank you. Down 15% year to date. You own it.
Yeah, so this is a very niche business within the insurance industry. I've been in it for a little while. I've been adding to it on dips. This year has provided a lot of opportunities to add to it on dips because it's been nothing but dips. I think this is mostly in line with the overall insurance sector. These stocks had a really good couple of years. This is not their year. There are obviously technological concerns about some of these companies possibly seeing competitive threats from AI. I really don't believe it in the case of Kinsale. I'm not worried about it. And I think the valuation here is fine. So I would not heed this call. I am not planning to sell any of my stock.
Let's take a look at both Uber and Rivian, guys, if we could, because Uber's going to invest up to $1.25 billion in Rivian in a deal to launch 50,000 robo-taxis. It's an interesting one. Josh, you own the name. We can take a look at I want to look at the reaction of both stocks, though, before you. Can we show that today? Is that a today?
No, it's year to date.
Can we show it today? Guys, on both of those names? That's what I'm trying to get at, please. So Uber's down, Rivian's up. There you go. Thank you very much on that. It's interesting, too. Let me just mention this because Megan Reeder, one of our producers who follows the auto space with Phil LeBeau, points out that buried in Rivian's 8K today is the fact that the company says, quote, in addition, the company no longer expects to be adjusted EBITDA positive in 2027 due to an expected increase in R&D spend associated with the acceleration of its autonomy roadmap. It was an important point that Megan wanted to make sure that was mentioned, so we are. So thanks for flagging that for us, too. What do you think?
Yeah, there's a couple things going on here. Rivian is investing in the autonomous future because literally what choice do they have? By 2030, most of the cars rolling off the factory floor all over the world are going to be autonomous ready. Part of that is because many of them will be working with the NVIDIAs of the world, and there are other providers with the software, the chips that enable autonomy. And part of that's going to be consumer demand. Why do we still live in a world where there's the possibility of getting hit by a drunk driver? It makes absolutely no sense. All of these cars should have at least the capability to drive themselves. In the case of Uber and Rivian, Uber has said publicly it is not interested in owning fleets of autonomous vehicles as part of its strategy. That's what sets it in distinction from Tesla and Waymo. However, they are willing to use their balance sheet to kickstart an ecosystem where there are other providers beyond Waymo and Tesla. In the best interest of an Uber shareholder is for there to be 1,000 companies providing autonomous vehicles into the marketplace. Uber benefits because they become the network that connects all of those fleets with the user. And I think this is just one more step in that direction. They did a similar deal with Lucid a month ago, did a similar deal 2 days ago with Nissan. They are working with everybody to make sure that the autonomous future belongs on the Uber app.
I would just add to that really quickly that Rivian is also already set to be helped out by the R2 rolling off the line, right? It's going to be the lower cost option that gets to compete against like the Ford Explorer, the Jeep Grand Cherokee, things like that. So at a time when oil is spiking and there's probably going to be renewed interest in EVs, it's probably already a stock that's going to be on the move.
All right, Josh Brown, the best stocks in the market today with the spotlight on what?
Well, we're going to talk about a store that I have never set foot in my life. It's called Casey's General Store. Shannon is from New England. You've never been to a Casey's, have you? Oh. Probably not. Malcolm, Mid-Atlantic region, you've never set foot. Okay, me either. Not important. This is a convenience store with a gas station. Bottom line is when gasoline prices go from $3 to $4, that is a 33% de facto uptick in revenue for the gasoline sales at Casey's. And this is a growth company, even beyond that more recent catalyst that I think has been driving some accumulation into the stock. They're going to open 80 new stores this year on a net basis. They say they'll grow 8 to 10% in terms of cash flow this year as well. And I'm looking at this technically. Guys, give me something a little bit. Yeah. So this is very simple. I think $600 is a pretty decent line in the sand from a risk-reward standpoint for investors. That's where I would set my initial stop, and then I would trail it. I would check back every Friday for the closing weekly price. So long as she stays above, I think this thing has potential to continue on this beautiful, almost pristine uptrend. You see how well it's obeyed that 200-day in the recent past. No reason to think that won't continue. And so long as we see these higher prices at the pump, and I'm not hoping that they'll last long, this will be one of the names that I think remains in favor. There are a few others, but this is a niche type of situation. Not many companies in the market beyond the energy sector actually benefit from higher prices, but this one does.
You actually have your eyes on another consumer-facing name, which hit a 52-week high just this Tuesday, and it is QSR, which is Restaurant Brands.
So I haven't had a chance to write this one up, but I probably will at some point. I want to give the viewers a little bit of a sneak preview on why it's on our radar. This name joined the best stocks in the markets list over the last couple of days. This one I've done a ton of due diligence on. It's Burger King, Firehouse Subs, Tim Horton. Stop laughing, Shannon. Tim Horton,
Channel
which is the coffee chick. And it's also got Popeyes, just in case anybody still had room left over.
Strong buy at Josh Brown Capital Management.
So this is a $25 billion market cap. Scott, I'll always remember what you just said. And you're talking about $10 billion in revenue. They drop about $1 billion and change to the bottom line. But this stock is under accumulation, institutional accumulation, if you follow the 13F. It's not hard to understand why. This is the type of stock that hasn't gotten that much attention in recent years, but it has been part of that rotation. Pershing Square is in here. Seth Klarman is in here. A lot of big names in the hedge fund world own the name. And the reality is that, look, this is a QSR business. The ticker symbol is literally QSR. It's the type of stock that people are seeking refuge in, so long as it's in this uptrend, and that's how it hit the best stocks in the market list. I'm going to do some work on this. We'll probably end up writing it. Last thing I want to say, there's a 3.5% dividend yield here. This is a company that is paying out probably around 3/4 of its cash flow to feed that dividend, which is very high, and I think that's part of the appeal of a name like this right now.
Okay, let's get back to Pippa Stevens. She has a news alert for us. Hi, Pippa.
Hey, Scott. So an administration official confirming just now that oil and gas export restrictions are not under consideration. No word on whether products is also included in that, but of course, as the administration works through the toolbox they have at their disposal to try and lower the inflationary impact of the these higher oil prices. Export controls had been something that had been talked about, but the White House saying that that is not under consideration at this time, first reported by Politico. We did see WTI briefly get up above the $100 level, but now up about 2% here at $98. Scott?
Okay, appreciate that update from you, Pippa. Thank you, Pippa Stevens. All right, let's do some final trades. Mr. Etheridge, you're first.
I'm going Okta. In a world run by AI agents, identity security is even more important.
All right, we are green there, about 2%. Shannon Sakosha.
Healthcare sold off pretty significantly this month, and there's some upcoming catalysts with MA reimbursement.
Just an update on PSX. If you're still long this from the best stocks list, this is where you roll your stop up. Get tighter.
Okay. I will see you this afternoon, just a couple hours on the closing bell at 3.
Hey, everybody. Welcome to Blue Cloud Trading. I'm George. It is Thursday, March 19th, 5:13 p.m. Eastern Time as I'm recording this video. And in this video, we're going to go over the index. Okay, the indices, the Dow, the NASDAQ, the S&P 500, the Russell 2000. We're going to take a look also at a number of stocks that they discussed on today's halftime report. We saw Josh Brown earlier today. We're going to look at the ETFs that you see right here, including gold and silver. We'll look at the Mag 7 stocks like Tesla, Apple, Microsoft. You can see the list right there, and NVIDIA. We will also take a look at about, are you ready for this? 24 stocks and ETFs all mixed up in here. Let's go ahead and get started. Okay, so we are starting off here. As you can see, throughout the day, the Dow basically stayed at these levels. It had gapped down and basically stayed in this consolidation area. There was a little bit of a pop-up here that occurred, but then it quickly, we even got above the prior day's close just temporarily around 3 p.m. or so before price dropped once again. Okay, so that was a very short-lived little situation. We created what's called a bear flag here, in my opinion. So, yeah, I don't expect this to turn into anything special. Let me show you guys what caused this pop, not just in the Dow, but also the NASDAQ, the S&P 500, and the Russell 2000 even closed up 0.66% towards the end of the day. So going to my Twitter page real quick, I did post about this. All right, let's see. Where is it? Right here. Let's click on this for a moment. It's an article. So with, basically with traffic in the key Strait of Hormuz, passageway largely at a standstill, the leaders of the UK, France, Germany, Italy, the Netherlands, and Japan expressed in a joint statement Thursday, okay, it was around that time, their readiness to contribute to appropriate efforts to ensure safe passage through the strait for the oil tankers. It doesn't mean that they're going to be basically getting involved at this point, obviously, in anything war-related, doing any military exercises with the United States and Israel. But what it does mean is that they will be involved basically in assisting in finding the mines, using drones, that sort of thing. And I'm not exactly sure how far they're going to go as far as their assistance in this manner, but they came out in this joint statement probably to appease the president since he was putting a little bit of pressure on them. And basically, without the oil, that would really significantly impact their economies. So something has to be done. So let's take a look at the heat map real quick and see how the individual stocks in the S&P 500, did today. You can see NVIDIA was down 1.02. Microsoft was also down. Apple was down. Amazon, Tesla, Google, and Meta all down. A lot of the software companies did a little better today. Some of the semiconductor stocks too, like Broadcom, AMD, Intel was up 2.55. The energy stocks, of course, were again in the green. Industrials were mostly red. Maybe there's a little bit of mixture here in a few of them, like GEV and FDX was up. Consumer defenses didn't do well. Neither did healthcare or consumer cyclical. But the financials, they actually recovered slightly, like JP Morgan, for example, was up. Bank of America, Wells Fargo, Citigroup was up 1.09%. Let's take a look at the groups here. This shows us the performance of the sectors. Once again, we have energy as the leading performer for the day, was up 1.6%. Basic materials was down 2.73%. For the 1 week performance, energy up 4.09%, basic materials down 7.76%. And here's the 1 month performance with energy up 10.6% and basic materials down 12.21%. So yeah, they've been the leader as a sector. Let's take a look now at the index ETFs, like the SPY, for example. And very quickly, I'm going to switch it over to the weekly chart here so you can see what's happening on the daily. In fact, yeah, let me just do this. I'll throw the daily so that I can do a quick little synopsis of this indicator that we're using here. So we're using the Ichimoku indicator. It's a Japanese indicator that's been around since the late 1960s. It's used by many financial institutions to help basically assess the strength of the current trend in any instrument, from stocks, ETFs, currencies. You can basically, impose this on top of a chart and get a quick synopsis of what's happening. What we're essentially looking for in the rules of Ichimoku, what we essentially want to do is see price, which is currently under the Ichimoku cloud. This should be above. That's more bullish, obviously. And right now we're in a bearish state, so price is under the Ichimoku cloud. The cloud itself is comprised of these two lines, the Senkou span A and the Senkou span B. All right, so the light colored blue line and the purple line. The light colored blue line is in the future, okay? It's derived by taking these two moving averages here, the midpoint, and projecting it out 26 periods into the future. You get the Senkou span B, that's the midpoint of the last 52 periods, okay, of all these candles, in this case, 52 days. And then instead of projecting it above or below the candle, like it does here, it projects it into the future. So there it is. And then this green line is the midpoint, the Tenkan-sen. That's the midpoint of the last 9 periods. So it's the fastest moving average. The red line is the midpoint of the last 26 periods. That's the Kijun-sen. All right. We want that green line to be above the red line. We don't have that currently. So the faster moving average is under. Price is under the moving averages. Price is under the Ichimoku cloud. That's all very, very bearish. And there's one final line, the Chikou span, or lagging line, that you see right here. That's the current price projected 26 periods into the past, okay? So if you see that white line, for example, is under the candle 26 periods ago, like it is here, that's also bearish. So the daily chart, extremely bearish overall with this indicator. One more final nail in the coffin is the fact that price actually closed under the 200-day today. So that's also very bearish. There's just one silver lining here, and that's the actual candle itself. It's this candle right here. It's a bullish spinning top. And when you see this type of candle after a drop, there's a higher probability that the next day it will move back up. So tomorrow, I wouldn't be shocked, to be honest with you, if I noticed that the SPY started to move up. Why is this bullish? I mean, let's switch it down to a shorter time frame so it can maybe help explain why it's bullishness. Here's the 3-minute chart, for example, for today. So if we look at this, this is yesterday's closing price right here, this dotted red line that you see here. So that's where we closed yesterday on Wednesday. And this morning we gapped down, right? So the price immediately had dropped. And in the morning, it started to recover. And from this point here, the lows of $655 or so, it actually did move up to 659. So it was up 0.68%, which is not a huge move, honestly, but it did, in fact, what happened was it stabilized, as you can see here in this consolidation box, right? Price broke above it based on those news from Europe. And, but, it's not like it really took off. Like, I think the news needed to be digested a little bit and immediately started to drop. So it's not like a significant, I think it's going to have a significant impact here on the price of stocks. So we'll see tomorrow, of course, but I just don't see that happening. Here we are again. So on the daily chart, expect maybe a move up slightly tomorrow, but it could certainly just as easily break through. So all this candle represents is a higher probability that we will move up. But if price gets under the low here, expect it to continue to the downside. Okay, the ADX here, this is the directional movement index down below. This white line represents momentum. If that's moving up, that's increasing. So that's more momentum, but it's negative momentum when the red line, which is the negative DI9, okay, is above the positive DI9, right? And so that's not a good sign right there. And the volume, if you notice today, higher than yesterday, right? So more volume as well. Not good, not good. Here's the Qs, the QQQ ETF. Very similar situation. Basically, it gapped down, but then it formed a bullish spinning top. This spinning top, I'll just show you what that looks like here on our candle pattern reference sheet. If you look to the left over here on this column, there it is. It's basically a candle that looks like a spinning top. Small little body followed by basically it has a wick on the top that's around the equal length as the one on the bottom. And that's what basically creates it. It shows the high of the day. That's what the wick at the top is, really. The low of the day. The opening price is where the body is, and the closing price is where price closed. So here's 9:30 a.m., for example. Here's 4 p.m. And this could have happened anytime during the market open or close, like while the market was open, I mean. If the candle is red, the opening price is here on the body and the closing price is at the bottom. But the wick itself still represents the low of the day and the high of the day. It just gives you a quick assessment of what transpired, how far did price move up, how far did price move down, where did it open in the morning, where did it close in the afternoon. It gives you a quick little picture, really, a visual aid. And so it is more bullish as a candlestick. However, it's still technically in a very bearish situation here because we're still technically very sound. We're still very technically basically in a decline here. As you can see, we've got bearishness because price is still under the cloud, and the cloud itself is bearish. If you look at the weekly chart, we're currently above the cloud, all right, but we have been declining. Now there is a level. Let me show you some levels. This 583.32 level. It's based on that prior low. I think it's imperative that we stay above that level. We might still continue to stay within this consolidation area for maybe a couple more weeks. But if we start breaking under, that's when the concern should be substantially higher. On a positive note, I'm noticing here week after week that the volume seems to be declining. So there's not as much, week after week, the volume is declining, meaning there's less and less trading happening. That's, of course, because there's nothing to trade here. This is more of a holding position. The Dow Jones, on the other hand, has dropped some more. And let's take a look here. I have this level here of 451.34 based on that prior high, but I think we have to focus more on this low right here. This, let's see, the low there is 454.56. Let's throw that in there. And I think that's the level that you want to watch very closely to see if it can hold up above this low here, right? Because this is where we had a nice bullish pattern called a bullish harami, those two candles that led to this nice expansion. And so now it's going to probably retest this level here, in my opinion. And once, if it can hold up above that level and maybe bounce, that would be a positive. But it doesn't look particularly bullish here with the directional movement index. The momentum is still declining. All right, Russell 2000 on the weekly chart. And by the way, let me just show you the daily chart on the Dow. We also got a bullish spinning top. Notice how we're still under the 200-day. This happened yesterday on Wednesday. We closed under and we continue to drop. So again, whenever you see a bullish spinning top, there's a higher probability that we might move up. But if we do, we're probably going to hit our head right at that 200-day or the Tenkan-sen. So we've got very strong resistance above. So keep that in mind. I don't see any reason why we're going to see a huge reversal here in the stock market. One more thing I wanted to mention that I mentioned earlier, going back to another post that I made. There's another event that's taking place. Let's see, there it is. Here's the article that I posted. So tomorrow, guys, the market will experience something called a triple witching day. All right, the market will experience a triple witching day, though it is still frequently referred to as a quadruple witching out of habit, despite single stock futures ceasing to trade in the U.S. in 2020. Triple witching is a quarterly event that occurs on the third Friday of March, June, September, and December, when the three major classes of derivative contracts, stock options, stock index options, and stock index futures will all expire simultaneously. This convergence typically sparks massive trading volume and heightened intraday volatility, especially in the final witching hour. So between 3 and 4 p.m. tomorrow especially. Expect maybe potential volatility, maybe even throughout the day. Before the closing bell, as funds and institutions, they scramble to close, exercise, or roll over their expiring positions. Tomorrow's market impact is expected to be exceptionally pronounced because an estimated record $5.7 trillion in notional options value is expiring right alongside a major quarterly rebalancing of the S&P 500, which will force index tracking funds into a heavy cleanup, buying and selling to match the new weightings. So just keep that in mind for tomorrow. Expect volatility, and it's uncertain which way it's gonna move, but it should be exciting. Russell 2000, check this out. It was up 0.66%. Interestingly, on the daily chart, it broke through. It opened under this 246.01 level, right? Now you can see that the Russell 2000 has been struggling with that many times, right? So here it came down, bounced, came here, bounced, came to this level and bounced again here, right? And bounced. And what's amazing is, okay, here we opened up in the morning. I'm sorry, I take that back. We opened under the 246.01. So that must have been pretty scary for a lot of people if they were watching that level. But again, it's most important to notice where price actually closes. And so as you can see, the close was above that 246.01 at 247.63, right? So there's the closing price. So just by a hair, we were able to sustain and remain within this consolidation area. And so the question is, will this potentially be the reversal area where price will once again come back and try to retest this level, which is the 258.20? And there is certainly a lot of resistance here, right? So you can see from this prior high here, if we go all the way across, all right, we'll notice that we'll also fall right at that where the Ichimoku cloud is, okay? So there's a lot of resistance around that 258.20. It's still looking very negative here with the directional movement index, but it might be also considered a time where some people who want to take some risk might come into this. It's possible. And if you look, interestingly enough, if you take a look at this, the Chiku span, which of course represents price, but it's in a line form, right? It's only showing you the closing prices here. Notice how it actually came to that level, the 246.01 right there, moved up, came back down, and because it's the closing price, see how it basically made a double bottom. So what we essentially have here, and it's kind of, it'd be more difficult to identify that with the Japanese candlesticks, but it's much clearer here when you're looking at a line form. One of the other advantages of this indicator is the fact that we have these line forms. We can more easily see the lower highs here, right? And the lower lows. And right now, these two lows are at the exact same level of 246.01. And we're bouncing a little bit with this candle. So just keep that in mind. I also noticed that the volume was a little bit higher today, and it was more, a lot more bullishness. If you look at the 3-minute chart for today in the Russell, this is what it looked like. All right, so here we are. This is where the price, now again, the dotted, let me get rid of these lines just for a moment. So you can see the dotted red line, which is actually yesterday's closing price right there. Okay, that's the dotted red line. So this morning it gaps down. This is where the green line is, the opening price right here. Immediately started to basically move up, okay, making a higher high here. It made another higher low here, and then it started consolidating, right? It started basically staying within this range for a little bit, and then of course the news came out, which made the price spike, but then it also fizzled out pretty quickly. It didn't really take off. So that's why again, tomorrow's going to be an interesting day. I can't be, I'm not as confident that the market's going to continue dropping, okay, tomorrow, based on the candle itself. So we'll see what happens. The VIX volatility declined 3.19%. So a little bit of the fear came out of the market, but we're still at elevated levels of 24. FEZ, the Euro stocks, did something kind of similar, bullishness here. You can see that in the morning we gapped down, and then we moved up, and we closed within the body of the candle. Now this pattern is called a piercing line pattern. These two candles, it's a bullish pattern. When you see this after a drop, we've been declining here, there's a higher probability that price will move up tomorrow. And we still have this resistance level. We'd have to break through that Tenkan-sen right there, but we might see another, maybe a short-lived move to the upside potentially. So even when we're in a decline, you may have these moments where price is taking a breather in the stock market. So let me show you guys this pattern real quick. Again, it's called the piercing line pattern. Price gaps down, starts moving up, closes within the body of the prior red candle. So let's take a look at that. All right, so we have to go over here under the double candle patterns, okay? And let me go ahead and show you that specific pattern. Here it is, piercing line. It's in the center. All right, so you get the red candle. Price gaps down lower than the closing price. So it gaps down here, and then ends up moving up, closing within the actual candle itself. So let me show you again. There's the drop, then price moves up, closes within the body, and that's essentially what we have in this pattern right here. The drop right there, closing within the body of the candle. Okay, let's keep going. GLD dropped 4.12%. Let's throw some lines on though. Check this out. This 422.55 level, it's based on this candle right here. It's a weekly level based on that prior candle right there. Going back to February 6, 2026. We have stalled right around the Kijun-sen, the 26 period. And on the daily chart today, we had a bullish spinning top. Again, same situation. I feel like we're more than likely to actually bounce a little bit here because we were able to actually stabilize, even though price actually gapped under this 422.50 level, 55 level, it did in fact close above it. So again, I think it's going to try to recover. I can't say for sure that it's going to actually break back into the cloud, but it's at a minimum, it might actually come and retest the bottom of the cloud. And that's just about 4 3/4 away from where we currently are. Silver did something very similar. I mean, there was a little bit of a scare here with silver this morning. If you looked at silver prices, they had gapped down significantly, and then the buyers stepped in. They did not want to allow this critical level, the 65.14 level, to basically be taken out, right? And price, as you can see, if we zoom in, it closed right above that level at 65.68. Switching it back to a 3-minute chart, you can see all of that transpiring here. There's the gap down, and then it spent the rest. It moved down slightly, maybe another like 1.6%, and then it started moving up. In fact, from this low here on the at around 9:48, okay, 9:48 a.m. today, it moved up 7.68%. That's huge. So I wouldn't, even though the percentages look pretty intimidating because price is down 4.4, I like the action that occurred throughout the day here with higher highs, higher lows on the shorter time frames. Okay, let's take a look at the Mag 7s next. Start off with Apple. That's a 3-minute chart, but let's look at the daily chart, which is still declining. It's probably going to find some support at the 200. Might bounce a little bit. We did get a doji type reversal candle here. On the weekly chart, that $244 level is the level to watch very closely. If we get under that, expect an even bigger decline. Amazon has been, since it reached this 195.75 on the weekly chart, it's been basically stagnant inside the cloud, which means there's nothing here to do, right? Here it is on the daily chart. This is actually more bearish than I thought. Looking at this, I mentioned this yesterday. What I saw was essentially a bear flag type pattern here. Actually, it's a little clearer to see this on a weekly maybe. Yeah, there we are. So yeah, the weekly chart shows it a lot better. So this is when you see a drop and then you see a small little move like this. Okay, it's more than likely to drop though. I'll show you this pattern as well. Let me show you guys this on the cheat sheet that I have on my Twitter page. Let's scroll down, click on that right there. And this is what it looks like. It's the bearish variant. It's after a drop. You see this little move up, and then it's more probable to continue dropping. If you guys want to get these free pattern sheets here, just go to Blue Cloud Trading on my YouTube channel. There's a link there. I'll show you guys under 10 more links right here. Click on that, scroll down, and there is my Twitter page. If you guys want to access my members only videos, the ones I do each weekend, click on this top link. If you like the software that I'm using right now for charting, use this link and get a $25 coupon. If you like the FinViz Elite is this software right here. Use the link on my channel to help basically my channel. Because when you do use these links, it helps the channel itself. And then, yeah, there's that Twitter link right there so it's x.com/BlueCloudTrader. All right, guys, let's keep going. And this is where you'll find all the member-only videos. If you scroll down a little bit, you'll see all the videos that I've posted throughout the last year and a half or so, maybe even longer than that. Let's keep going. All right, so Amazon, I'm a little bit more bearish on this one. Google's interesting because it has been stable in a sense. It's been stuck in between these two moving averages. I call this area here between the Tenkan and Kijun, I call that the equilibrium zone. So it's an equilibrium. And if you look at the actual directional movement index, notice how the green line and the red line are around the same level, right? Neither one of these lines is dominant. When the green line is above the red line, okay, the trend is to the upside. It happens right there. You can see the expansion right there, all right? When they start to converge like here, all this means is that we're basically in a consolidation stage, all right? Price is just moving sideways. So Google has potential to recover here. Here's the daily chart. Again, you can see it very clearly. But if it does break under that 296.12 level on the daily chart and closes under that level, which is from back here from December 17th, 2025, I'd be very, very, very concerned because it's actually formed, if you look at it a little closer, a very complex looking head and shoulders pattern, which is also bearish. Here's the head, okay? Here's the shoulder, okay? And here's the other shoulder. And this is the neckline, I guess you could call it, right here. So that's why it's really critical to pay attention to that pattern. That pattern is also, of course, where is it? Show you guys under highlights. Oh yeah, you can find these right here by clicking on once you're in my x.com page, make sure you hit highlights, this tab, and scroll down. That's where you'll find the candle pattern reference sheet, and then just click on it so you can see the larger version of it. Here's the head and shoulders pattern right here. That's a bearish variant. Again, it's when you have this high right here. You have a higher high and then a lower high, and it creates this, what they call a shoulder here, and this is the head, okay? And then this is the neckline right here. So these lows here are broken. Once those are broken, expect a decline. All right. Meta. Let's look at Meta next. Meta is, let me throw some, well, it's in a decline right now still. It's been dropping. It might find some support around the 5.9, around the $600 level right there, based on these lows. And on the weekly chart, let's take a look at that. It's, yeah, 2 weeks now in a row where it's dropping. Let me throw in a support level to pay attention to for Meta. If you have a position in it, it's this 581.25. It's based on this low right here. I'm going to color it light blue. I'm going to get rid of this old level. That's an old one. I'm going to color this purple because now that's more of a weekly level. So it's been stuck in between the 581 and 796. If it drops under 581.25, expect another decline, maybe all the way down to 479, where it's going to most likely find more support. Okay, Microsoft. Here it is in the weekly chart, still declining, has not reached the 200-day yet. But if it does, it's more than likely to maybe at least find some support for a little bit. Not something I'd be interested in buying here, obviously. Netflix. Netflix had a nice little move up on the weekly chart. You can see that. This was during the week ending February 27th. After the earnings announcement, it came up, touched the cloud, and then dropped. So 2 weeks in a row now we've been dropping. Here's a daily chart. We basically, as I mentioned yesterday and the day before that, how price has been finding resistance at the cloud itself. It found resistance right here at the Tenkan, and then it dropped. So now it dropped 3.11%. My expectation is that this stock will actually drop some more tomorrow, maybe all the way down to the Kijinsen. The next level of support is around 4.3% away. NVIDIA. Hold on. NVIDIA is, okay, we have a bullish spinning top here. So it stalled right at the 200-day moving average, the dotted yellow line that you see right here. It's still in the consolidation box. There's nothing really here to do with NVIDIA as far as I'm concerned. If you look at the daily chart, the directional movement index is pretty negative. If you look at the weekly chart, it's just basically no man's land. Nothing's happening. It's just sideways action. Tesla. Tesla is above the cloud on the weekly chart, but as you can see, it just dropped under the 387.53. Okay, if you look at the daily chart here, that's not a good sign. It's more likely to continue dropping tomorrow down to the 367.71. That's my expectation. How far away are we from that level? We're about 2.9% away. All right, now I'm going to go through the rest of these pretty quickly. I don't want to spend too much time. The majority of these stocks is something off technically. I've highlighted the top 4 here with a little blue flag because these are looking the strongest out of the bunch. Okay, and everything else looking a little bit on the weaker side. So let's start off with Oil K, which is, of course, the ProShares K1 Free Crude Oil Strategy ETF. This one here on the daily chart created a bearish spinning top today. Again, based on the news. So like I said, oil has been moving up so much, I wouldn't be shocked to see a short pullback. But I would expect that would be a short pullback. Maybe a day, maybe 2 days, maybe Monday as well, potentially. It depends on how far down it drops. If, however, tomorrow price gets above the high of that wick, expect it to continue going up. It doesn't always necessarily lead, these reversal candles don't always lead to a drop, right? Over here, for example, we had that exact candle, but we never got under the low. We got above that high and it continued moving up. We might see that same thing happen again, right? So they're not guaranteed. They're just basically higher probability. And I think it's a higher probability pullback here. In fact, if you look at the volume bar here down below, it's higher volume here, more conviction to the downside than it was back over here on this candle, right? So we'll see what happens tomorrow. What else? Look at QSR. QSR happens to be, this was Josh Brown's best stock on the best stock lists today on the halftime report. I liked it. Every once in a while, Josh Brown picks a good one. Here's a weekly chart. I like the fact that we have a bullish cloud. Single span A is above the single span B. Price is above the Tenkan and Kijinsen. ADX is strong. Volume is strong here in the weekly chart. I like what I'm seeing with this weekly chart here. And on the daily chart, we've been basically moving in an up move here. You can see that price pulled back and then quickly recovered and it started moving up again. So I like QSR. I also added PSX, which is another stock that they discussed on the show. Phillips 66. I actually added this to the portfolio today. So these two stocks were added. I'm sharing that with you guys only because they discussed them on the show. I typically do not share all the trades that I'm placing on the free videos that I do here daily. But if you guys want to get access and want to find out when I actually close out of these positions, you should consider becoming a member by hitting the join button. Again, you can do that. If you're on my page here, there's a join button right here. Click on that and then select Blue Cloud Trader, the second level, so you can get access to those member-only strategy videos. If you want to get daily trade updates, though, you do need to upgrade to the Legend level membership. This is where you get the daily trades, okay, that I place throughout the day. Okay, let's get back. And it's free to subscribe. Don't forget to subscribe before you leave this channel, folks, and hit that notification bell. Helps to support the channel, push it out to more people. This is more, I'm trying to help educate population on trading, and this is, of course, this is my system. Everyone has different trading methodologies. I've been trading for over 25 years now, and this works for me. I like to keep it simple. I like charts. I like to review the news. I like to see what's happening. Why is the price of the stock moving up or the ETF, and try to make some sense out of it. So PSX looks very bullish in the correct sector, energy sector. I expect this to move up. I already have a lot of oil stocks in my portfolio, but I added that one as well today. XLE, the ETF for energy, has been on a roll here. As it's been moving up significantly since the broke the cloud right back here on January 2nd. It's moved up almost 30%. So XLE has been in this very strong uptrend here in the daily chart, also on the weekly chart. I mean, just look at that, right? All-time highs now. All right, now the rest of these stocks and ETFs, there's something off. Let's take a look at Micron. Technically speaking, I'll share one more. I did actually close out. This is a position I closed. I wanted to share it since they brought it up, and Micron was big in the news because they came out with their earnings announcement. Now I closed my position, and I shared that trade with members on Wednesday prior to the market close. You can see what happened. Price dropped significantly. It seems to be recovering a little bit on the daily chart, okay? There's a higher probability that we might see this now bounce again. But the weekly chart shows us this reversal candle. And typically, if you see something like this, you generally want to stay away. I like to use both time frames to help me determine whether an entry makes sense. I mean, if you see this type of candle, there's higher probability the next week we might see a pullback. But again, this company came out with amazing earnings. They did quite well. But yeah, I would. That's all I got to say. And I'll go a little bit more in depth in my weekend video about my entry and exit on that one. OKTA is Okta Inc. Class A. It's in the technology sector, software infrastructure. Now this one here is under the cloud. It's in a bearish situation here on the daily chart. It's under the 200. I'd skip that one. Not interested in that stock. Here's UNG, the natural gas ETF, which has been moving up slightly here, but look how volatile this thing is. It's all over the place. And it was down 0.87% today. So it gapped up in the morning and then it dropped, creating what's called a dark cloud cover pattern, guys. It's the opposite of a piercing line. It's when price actually gaps up and then closes within the body of the candle, the prior candle. So dark cloud cover. It looks like a dark cloud above it, basically. You find that in the chart pattern reference sheet that I showed you guys. KC General Stores. Josh Brown likes this one. Here it is on the daily chart. It is above the Tenkan-sen Kijun-sen. Now, the thing I want to mention here is that the Tenkan-sen and the Kijun-sen, because it's always looking at the midpoint of the of each candle, and that's how it's assessing, right? So the 9 period and the 26 period. Sometimes you'll notice that the moving average actually flattens out, and it becomes a much harder level or a stronger level of support when that actually happens. You won't see that in the traditional moving average. They tend to be a little bit more fluid, right? But in this case, all these moving averages, they can flatten out. Right now, the fact that the Tenkan-sen and Kijun-sen are at the same exact level means that I would probably want to wait first for price to break above this consolidation area, okay? Because it's basically stuck right now. I would want to wait for confirmation of that, and we don't have that yet. Here's a weekly chart. Again, it's looking strong, but we also have a shooting star reversal type candle here on the weekly. Another thing I'm noticing on the directional movement index here on the weekly chart is the momentum is starting to come out. That's when the ADX starts to decline, as you see right there. Okay. Another stock, RIVN, they brought up. Here's the weekly chart. It's under the 200 on the daily chart. It is inside the cloud. I'd skip this one. It's recently been creating some higher lows. So you can see that right there. But it's also a symmetrical triangle, right? And it's stuck inside this consolidation area here. I'd hold off on RIVN. Uber is also basically created a higher low here. Again, it looks more like a bear flag pattern to me, honestly. So it reached the 200. I'm sorry, it reached the cloud itself and then dropped, and it got and closed under the Tenkan-sen today. So Uber's not looking that bullish. KNSL, this is the financial services sector, insurance, property, and casualty, down 6.27%. I mean, it's just been in a downfall for, I don't know, all the way since back here, 2025 and 2020. Here's 2024. 2024 is when it reached its all-time highs of $550, and now it's at 326. So 2 years, and it's been declining still. XLY has been in a downward channel for a little while here. I'd stay out of this one, discretionary sector. You know, people are going to be more interested in taking care of their most important needs right now. And yeah, consumer discretionary is probably secondary. And so I think those stocks shouldn't do as well in this environment. XHB home builders took a hit yesterday when the Fed came out, and it's less likely now that they're going to be cutting rates. So that's going to impact real estate. It's going to impact home builders. It dropped, but it created this little what's called a doji, and it's a reversal candle. So there's a higher probability it might move up again, but again, it's probably going to be very short-lived. I'm not saying this is by any means a bottom here. It's also let's see. Let me just throw on the support level based on this low. The low there is, what is it? It is 98.66. It's a weekly level. If I switch it over to the weekly chart, you'll be able to see what I'm talking about. See that wick right there? So 98.66, and we're just hovering slightly above it at 98.72. If you look at the daily chart, it's just barely above. So it's trying to hold on. We'll see if it, if it can recover tomorrow. KBE, the bank ETFs, they created a piercing line pattern right there. That's a bullish pattern. We might see it move up, but it's not something I would touch right now. IYH might also have a little bullish, a couple of bullish days here soon because it reached the 200-day moving average. There's a possibility. Interactive Brokers is under the cloud bearish situation, but we got a bullish spinning top. Maybe that will also bounce a little bit. CBOE, another bear spinning top. I mean, I don't know about this one. It's under the Kijinsen. It too might actually pop a little bit tomorrow. We might have a bullish day tomorrow. It's possible. Based on the last, I don't know, hours worth of trading. CME Group Inc. is up 0.59%. That's the financial services sector, but nothing special here. We have a negative crossover, the Tenkan-sen under the Kijinsen. That's not good. If you look at the weekly chart, that's more bullish. Prudential Financial is inside the cloud on the weekly. I'm sorry, the monthly. On the weekly chart, it's under the cloud, and on the daily, it's under the cloud as well. WFC, Wells Fargo and Company, is under the cloud. It's staying right under that Tenkan-sen. I'd stay out of that one. Capital One, same situation. We have a bullish little spinning top, but we've had multiple little bullish spinning tops throughout this whole decline. So don't get too excited about these. Same thing here with XLF. The only time it makes sense is when we're technically above the cloud. That's when you start using those. You start seeing a bullish pattern or bullish candlestick, like the hammer right here, that will lead it to a move up. There's another hammer that led to a move up. There's a bullish spinning top. Now this one was under the cloud, but that one did lead up. So that's what you want to pay attention to. All right, Robinhood declining, down 0.99%. It seems to be stabilizing though. It seems to be stabilizing here, right there. So it's building a little bit of a consolidation stage. Still under the cloud, nothing to do. And Goldman Sachs, this one here found support at the 200, but stalled at the Tenkan-sen. So again, nothing exciting happening here either. This is still technically in a decline. I'd stay out of it. And that's all I've got for you for today, guys. Thank you for watching. I appreciate you. Don't forget to like. Don't forget to subscribe. It is free to do that. And if you guys want to join to get access to this last members-only video, I went over 37 new stock ideas, and some of them that I actually added to the portfolio during the week. And then if you click on that 10 more links, that's where you'll find all the links that, you can check through all of these, including this property management software that I use. It's great. It's called Inago. All right. Guys, have a good rest of the night. I will catch you all in the next one.